Good. We're about to kick this off. Just to mention, there's an audience watching virtually, and as well as the audience in person. Once again, thanks for making the time. We're happy to discuss a very important topic, specifically about the African capital markets, the opportunities that we see, where the challenges are, what could be done right, and how do we move forward. So to introduce I'll start with a bit of just my views around doing business in the continent, particularly in the capital market space. And my view is that for anyone in business or running a startup in Africa, you should always think like a farmer. In a way, you plant, you wait for the rains, you have to plow, then at the end of it, you take your crop to the market. At times, the weather might not be favorable, and if it's favorable, I mean, you have to learn around how do you navigate some of those challenges, and that's what we're here to discuss today. So to introduce my panel, I'll start with Shuba here from the Bank of America. Extensive experience in the capital market space. Led a couple of deals in and out of Africa, advising big corporates to some of Africa's leading companies that have IPO'd in London and across the world. I'll let him maybe do a bit of intro, introduce himself, and say a couple of words before I go to my next guest. Good.
Thank you, Eric. Delighted to be here. And look, I think as Eric said, I run the investment bank for Sub-Saharan Africa at Bank of America. My background is I've spent sort of over 15 years across different facets of investment banking, primarily on the equity financing side, where I led a number of IPOs from the region, internationally and locally. And look, I think this is a fascinating topic, right? Ultimately, the IPO market is absolutely an essential, critical component to ensuring that there's a virtuous cycle recycling of capital for the ecosystem. And a lot of the leading sort of fintechs that are growing out of the continent are very much the IPOs of the future. And it's not going to be without its challenges, but it's an exciting time to be seeing a new group of companies that frankly are in a position to mitigate a lot of the challenges that we generally see with IPOs from the continent internationally. So looking forward to continuing the conversation.
Good. My next guest is Miguel Azevedo. Had a pleasure of chatting with him earlier today. Quite experienced in the capital markets. Based out of Dubai, advised a number of transactions from big multinationals like Coca-Cola, done a couple of things in the African space. I'll let him maybe say a little bit about himself.
Very good, thank you very much. I've done quite a few transactions in Africa together with Shuba, as we used to be colleagues, now we are competitors. So I learned a lot with him in those transactions. So I work at Citi. I chair the investment banking business for Middle East and Africa. And let me just say a word about this particular event. And I remember coming here the first time for this Washington DC event. It was, I can't remember, way before COVID, maybe 5, 6 years ago. And it was a small room. I was on the table, and next to me there was someone sitting that I had never met before. And that happened to be GB from Flutterwave. And Flutterwave, no one knew what Flutterwave was at the time. And so that's where I actually got to know him. And it's a $3 billion valuation kind of thing these days. And that's the merit of this event, is that you find these people right at the beginning of their journey. And 4 or 5 years later, people like Chu and myself, will be competing to take them public and to do IPOs and having the privilege of having them as clients. But that's fantastic. And honestly, nowadays in Africa, this is the most vibrant sector. And Africa is the most vibrant continent in this space. You have the most amazing stories, and it's just so rewarding to be part of that.
Good. Thank you, Miguel. My next guest panelist is Boom Jr. Leads one of Africa's leading investment platforms, giving their users access to not just equities, but private equity and a couple of other deals. Experience in the capital markets, previously worked with NASDAQ, quite experience around the technology side of things. Boom, introduce yourself. Yeah.
Hello, everybody. Hello, can you hear me? Perfect. Hello, everybody. So my name is Boom, and like Eric mentioned, I used to work at NASDAQ 5 years as a fintech software engineer building capital market solutions. So my background has always been in financial services, fintech and capital markets specifically. MBA from the University of Chicago, focused on finance and strategy, and for the past year and a half have been building Daba Finance. So Daba Finance, for a savvy crowd, we often say we're building Citadel for Africa. But for people that might not know what a market maker is, we say, hey, we're just building a unified investment platform. So we have a retail app that allows individuals to invest across venture capital, either funds or individual companies, and public equities today focused on the Francophone West African market, and also building institutional dashboard for investment firms and asset managers that want to get their clients invested in those markets, and APIs for fintechs that want to plug into our infrastructure. So very happy to be here on this panel with these bright individuals, and I hope we could have a fruitful conversation.
Great. As we kick off this conversation, I would just like to give a brief around some key highlights that I've seen happen across Africa from a capital market standpoint. One, in 2022, which is last year, Sub-Saharan African capital markets raised $1.7 billion from issuances, which is 24% higher than the previous year, which is 2021. But lower than the previous year's average of about 1.8 billion. That's according to data from Refinitiv. South Africa accounted for the largest percentage of this, of about 1.5 billion in equity capital markets in last year, while Nigerian issuers raised about 277 million. I come from Kenya. We haven't seen any activity. I mean, it's been a dry market, but hopefully, the government is making significant progress to make sure we have a few listings. And the other bit of it is that across Sub-Saharan Africa, there are about $1 trillion in assets currently held by pension, insurance, and collective investment schemes. The challenge is that these funds have a huge problem finding opportunities that meet their risk and return requirements. And in my own opinion, I think there isn't it's not just an enough product. And there are projects today, particularly in finance, in infrastructure that, aren't finding ways to get financing. So as we kick off this, maybe I'll start with you, Miguel, from your experience in the capital market space. The market has been dry. We've seen a lot of, in the last 1 year or so. What will you say are some of the new instruments and strategies that that are emerging for African public markets to cater for the evolving needs of the private sector?
Well, yeah, good question, difficult answer, but basically everything has been very quiet everywhere around the world, maybe with a few exceptions like the Middle East. So it's not very different from everywhere else. There has been quite some private capital flowing into Africa, so there has actually been quite a bit of activity in Africa in that space. those transactions will come to the market later on for IPOs. So I'm actually not very negative about it. We just need the market to be better globally, which will only happen when we have kind of a inflation coming down, I think. But most importantly, we have great stories being baked in Africa right now. And at all sorts of valuations, a few billions, 1 billion and below a billion. So I don't think there will be lack of supply. And when it comes to demand, i.e. investors, I always believe if you have a great story, you will find the right investors. We can discuss listing locations, which used to be basically, you know, and if I remember well what Chubo used to tell me, London is the default place, New York is also an option. I think nowadays there's a few more options. Maybe I'm biased because I'm based in Dubai, but I believe the Middle East has become a real option, especially if the company has some sort of Middle East nexus. And I would bet that in 2024 we will see some African fintech going public and potentially in the Middle East. That would be my kind of my bet here.
Interesting, such a huge call. Back to you, Shuba. You've led some of the biggest IPOs. I mean, I'll just mention a company like InterSwitch, which was a big deal in Africa when they listed in London. I mean, from where you sit, how have African startups and corporates leveraged the capital markets to attract funding, given that IPOs are a bit rare in Africa?
Yeah, sure. I mean, if there's anything I've learned is Miguel's always right. So I think we should listen to that advice, and I completely agree with everything he said in terms of just the you know, the trajectory of things in terms of the sort of innovation of the companies that are coming out of the continent and the options that they have. Look, I think when it comes to listing, it goes back to every company that looks to tap the capital market to become a public company. We see so many of these that sometimes people forget the real kind of advantages of being listed, right? Which there's obviously providing kind of shareholder liquidity and growth capital, which is really, really important in the context of providing exits for those private investors that will then recycle capital in growing the new group of companies. So that's a really important piece. There's also, of course, employee incentivization, which you know, having a listed stock is really helpful in that context of attracting the best talent that's out there. There's acquisition, having an acquisition currency, and we've certainly seen that in the fintech space. Network International, which was a business that we both took public, you know, buying DPO back you know, a few years ago. You know, without their listed currency, they probably would have still been able to do it, given the strength of the market at the time. But it certainly helped in providing liquidity to consummate that transaction. And you know, there are many other examples of that in more traditional sectors, which have been you know, a majority of the transactions that we've seen out of Africa, but naturally the old economy sectors. But going forward, like with every market, we certainly expect that to change, and I think the fintech space will definitely be, you know, front and center of that.
Okay, great. To my friend Boom, you know, you've an experience working at NASDAQ, and of course you picked a ton of lessons around what you learned there and build your product. And you know, in Africa, one of the biggest challenges that we face is liquidity. It's a bit difficult, I mean, to provide enough liquidity, and for a stock market to work efficiently, there has to be a bit of liquidity to just pump the market. From your experience, what do you think African public markets can learn from the emerging and developed markets to solve challenges to do with the liquidity?
Thank you for that question. I think there are quite a few points there. I mean, first, for contrast, if you want to compare kind of like the nature of some of the more developed markets versus most African exchanges, talking about public markets, in the U.S. alone, I think the total market cap of companies is about 40 trillion. About 300 billion gets traded almost every day. So compare that to African markets. Totally, the public market's about 2 trillion, and less than 1%. There's 1%, less than 1% is traded daily. So the trading levels are really abysmal. When it comes to how can liquidity be improved, number one, the companies that are listed in a lot of countries, the trading is not actually an equity play. Oftentimes you have like it's a dividend play. So you have a lot of companies that are actually not trying to grow their asset value, but more so just trying to provide yield to their investors. So when you're in such a market where everybody behaves that way, then obviously the shares will not really move much. So that's kind of like the companies need to be incentivized to actually deliver more value for their stock. Secondly, I think investor participation needs to be facilitated. I think a lot of people do not have access to investing, right? Access to brokerage services, or actually just being aware of how to invest on these markets. So, the lack of participation, the lack of incentives for the companies to grow their stock is one of the few things that are preventing, liquidity to reach interesting levels.
Okay. Before I go to my next panelist, but maybe you could mention about the role of African InvesTechs. You're building an InvesTech platform to collaborate with, say, traditional players like banks, broker-dealers, to just increase that market efficiency and, yeah.
Yeah, definitely. So that's exactly what part of like what we are doing, right? Is we know that, so if you think about, so one of the markets that we're focusing on is the Francophone West African market. There are 300 million people in the West African Economic and Monetary Union region, and only 100,000 investment accounts. So 100,000 investment accounts, 300 million people. So you can see the gap, right? And the banks, the brokers, the asset managers, they want to get people invested, right? But unfortunately, the way they reach the retail or the end investor is broken, right? Their user acquisition channel is broken. So where investment platforms like ourselves come in is we say, okay, we're going to aggregate your assets and we're going to distribute it through channels that you today have not built the technology for, right? And meeting the end investor where they are, providing them savings products where they are, whether it is how when they get their money through their salaries, whether it is providing them a specific user-friendly, consumer-focused investment application. Those are some of the channels that can actually, without having to reinvent the wheel, provide more liquidity, allow more people to participate in the market and help them understand how it works, and kind of like get people invested.
Great. Over to my friend Miguel. When you speak about capital markets, regulators have a huge role to play, to bring on board confidence and also to increase transparency. Having worked with some of these African private sector players, governments, what steps do you think are being undertaken by policymakers and regulatory bodies to increase transparency while improving confidence in the public markets?
Yeah, not a lot, I guess. That's the answer. I think what's really important is to create the building blocks of the market, and that's where you're playing such an important role, and I hope it really gets the critical mass that we all need for the market, is creating a domestic demand for stocks. It's very important to have the local retail believing in those stories. That gives confidence to everyone. I think the other element is very, very important is to have an ecosystem that knows how to pick the right stories. Don't bring the wrong company to the public market, because that destroys confidence in one shot. And then, yes, you need basically, the basic rules of governance. But those have been invented. It's very simple. It just, literally copy what has been done elsewhere. There's not much creativity around that. I was tempted to say that's all we need from governments, that just let the market work, but the regulation is a very important part of the government, and only governments can issue regulations and can issue the legal framework. Having said that, I am slightly negative in terms of having many sizable and real domestic stock markets across Africa. I think the solution is for regions of Africa, like in West Africa, where we have the BRVM. I always get the words wrong. BRVM. I think that's the kind of the model that we need. And hopefully, with more economic integration, this will happen. And we need time. We need better macroeconomic management, which is probably the biggest challenge in Africa these days. But if we get that, I think this will follow. There's no lack of entrepreneurship in most countries in Africa, and that's effectively the fuel for an active market.
Good.
I would love to just kind of like add something on this. I think regulators and governments could actually also act in supporting the perception of capital markets. So if you think about, like NASDAQ here and the New York Stock Exchange, like, why is the NASDAQ kind of like, how I call it, that billboard so exciting, right? Why is the listing so exciting? I mean, I think there are like psychological elements to the perception of investing, and I think that has to go with the government. It has to support kind of like, some of these exchanges are privately held, but the government has a stake in them. So they have to push the perception of, hey, go out there, go communicate. And the other piece is lowering, yes, there needs to be some tight regulation around who can list. You want to definitely have good actors. But I think that there are opportunities that oftentimes could get listed, but maybe because they don't hit a certain size, right, would not eventually get listed. So it prevents the participation of the public in certain opportunities that have all the positive criteria, but maybe do not have the right market cap. So there are a few things around perception, and also kind of like letting more quality companies list, irrespective of the size of those companies.
Good. Speaking of quality, Shuba, I'm sure you get a lot of inquiries from startups or established companies that will want to list. And I'm just wondering, I mean, from where you sit, what do you think are their main challenges that they're facing when they seek to list in the public markets, and how do they overcome these challenges?
Yeah, look, I think it's an interesting and very timely question, right? Miguel talked about some of the global challenges with the IPO markets today, which are, of which Africa is certainly, included in that, and outside of the Middle East and parts of Asia, I don't believe there's been one major fintech IPO over the course of this year. So it just gives you some context. Now, markets are cyclical, and the good news is that the markets will come back and will be open again. Question is, how soon? I don't think anyone in this room is smart enough to predict that. If you are, please feel free to raise your hand. I think for Africa specifically, I think historically have been two major challenges. Some of them not necessarily just for Africa, but I'd mention them. I think one is that internationally there's a finite pool of investors that actually are mandated to invest in just purely African stories. And what that creates, if you think of an exchange, like any marketplace, is a supply-demand dynamic, which means that you have to, go beyond what is your natural audience to attract investors that don't have to invest in you, but are attracted to your story. And I think this is where we, very, very excited about the fintech opportunity, because in terms of the attractiveness of fintech opportunity globally, Africa is the most attractive market for the reasons we know. And as such, we believe certainly that the right African fintechs will be able to attract your tech investors that are investing across the globe, your financial services investors investing across the globe, and that opens up to a much bigger audience of investors that a traditional African business may not be able to do. So I think that's one. The second challenge has been around valuation, and this, in today's market, it's a topic that applies to pretty much every company that wants to IPO today, because valuations have dropped very sharply in the public market over the last 24 months, and as such, there is a big bid-ask spread between where investors are willing to pay and what shareholders and founders are willing to sell their companies for. So that is probably the fundamental reason today why there isn't as much IPO activity as you've seen, globally. That will obviously change as expectations change on both sides, and there's a bit of narrowing. For Africa specifically, there historically has always been a discount that has been applied to Africa for certain perceived risks. I would argue that discount today in the public market, both the equity and the bond and the debt side, is probably as wide as it's been for a long time. And a lot of that is, is due to some of the macro challenges that, many countries have faced. But again, I think the positive side of things from the fintech perspective is, in terms of the structural growth opportunity and the performance for a lot of these businesses, which clearly impacted by the macro situation, I believe that in the medium term we'll be able to demonstrate a track record that shows that they are able to operate and deliver very attractive returns on a risk-adjusted basis that will bring the right investors to the table. So I'll pause there.
Great. I also like to speak about the role of technology in just democratizing the capital markets. So I also run a fintech that enables Africans to invest in fractional US stocks, and I was lucky to work with a company out of New York called DriveWealth, to just enable us to give African investors access to the stock market. And during the time, it's easy how they've built a technology that could enable anyone to access fractional stocks, be it Apple products that people use on a daily basis. And just from that experience, maybe Shuba, could you touch on, from where you sit or from your experience, what are some of these promising areas that you think innovation, particularly in the InvesTech space, can advance the democratization of the capital markets?
Yeah, no, look, I think it's fascinating hearing about your business and BAM's business and what the things that you're doing. And there's obviously several others that are very much focused around, different elements of financial services, savings products, wealth management, etc. I think from what I've seen live on a few transactions, I'm quite actually impressed with some of the capital markets fintechs out there. And in two instances in Africa, those have actually been led by the telcos that have done transactions on the local exchanges and actually invested a lot of capital in actually building platforms that are able to, in partnerships with different stakeholders, the exchanges, the stockbrokers in various markets, to build platforms that are able to facilitate investments or subscriptions in IPOs on local exchanges. And I think in the two situations that I've seen, they've been actually quite a tremendous success. One of them, 80% plus of the subscriptions that came via digital channels were from people under 40s, which I think is encouraging to see, obviously the newer generation really adopting that model. And a similar number of them, actually, interestingly, were also subscribed by women. So look, I think there's some real fascinating kind of innovations that are happening in that space, which is really important to address, I think, some of the challenges of lack of liquidity and activity on the local exchanges, which are extremely important.
Great. To Miguel, when you sit in a room with regulators and policymakers, and they're usually a bit apprehensive in terms of the role of technology to democratize, what do you tell them?
Fortunately, I guess I haven't been in that position yet, but I really don't think there is an issue of adopting technology in Africa. In fact, I think that issue is much more relevant elsewhere, because technology in Africa is not disrupting anything. It's basically allowing something to erupt. And that, I think, is very different. And I would assume that regulators will have a relatively benign view of technology. Obviously, they need to understand, and there will probably be people like me there that, we will have our own difficulties in understanding all the technology that is coming up every single day. But I'm very confident, actually, that if there is a place in the world where technology is very much accepted because it's solving real problems, it's in Africa. If the regulator does not understand that, then you have a much bigger problem. And it's not about technology. It's about the regulator does not understanding the market itself. That you do have in some places, I have to say. And that's why I said before that we need to be selective, and we should have only a few stock markets across the continent that should act as hubs for investment and benefit from what Baum was saying and is doing in terms of creating retail demand, which I think is very, very important. Because once you have retail demands, once you democratize, then things will follow because the need is there. So I'm relatively optimistic on that front.
If I may add, look, I think a stock market is no different to any marketplace, right? An Amazon, an Airbnb of this world. It's all built on trust, right? And you need to give investors confidence that they're investing in the right businesses, and there's transparent disclosure. You need to give the companies that are supplying their stock confidence that it's a marketplace that they can efficiently access capital. And then the other side, you need the rules and regulation that accommodate that. And I think it's ultimately a journey. And the two capital market transactions I was referring to, there was big debates about, do you only go for digital applications versus having digital and paper applications? And we all know paper applications are much more cumbersome, take a lot more time to consolidate the results. And I think there's an important role for regulators also to make sure they're not excluding people as well, of which at least in today's world, given the in some cases the level of literacy and access at the moment, some people are unable to subscribe via digital channels. So I think we're on the right path to the right place. That's going to come in stages, but regulators definitely, I think, are keen to see that advancement in the market.
Okay, thank you. As we come to the end of this discussion, I would love to get everyone's view around the future, the market opportunities, and of course, where each one of us sees the prospect for the capital markets in Africa from an IPO standpoint. One of the companies that I hope to list sooner is Flutterwave, and it's good to see their representatives here. And I mean, people in Africa use their products, so that will be a perfect opportunity. So maybe take about 20 seconds to share your views around prospects for IPOs in Africa. Yeah.
Happy to go first. Well, I think in terms of IPOs, I don't have any specific name that I think will be IPOing. I do think that there are quite a few exciting private companies across the board. They might not be billion-dollar companies, but I think there are several companies within the $100 million to $500 million valuation range that are private that a lot of us might not actually know, but that would make great investments. So I've come across a few during my time in Côte d'Ivoire. So definitely, I think those would be great candidates if the market is appealing to them. A prediction around just kind of like how I think public markets could be evolving over the next coming years. I think there's been active effort from regulators, but also the different stock exchanges to federate their efforts and create kind of like a unified kind of trading block across. Somebody in Nigeria could invest in the Kenyan stock exchange. By facilitating with regulation being lifted and facilitated and eased. So I think with those efforts and also with a more clement investment investment landscape here, especially with hopefully interest rates falling down, I think we'll come to a point where there'll be a culmination of capital and tailwinds that will push more capital into African public markets. How soon will that happen? To Chuba's point, we don't know, but I think that is not too far. So that would be kind of like my prediction.
Look, it's an interesting question. I think that, look, given where we are in the states of the global market, there are a number of things that are, need to be in place. I think before we see, fury of activity on the IPO front, frankly, globally and also in Africa. I think certainly the way these typically pan out when you have moments of crisis is you first see IPOs, successful IPOs from companies that are very large in more defensive sectors, successfully list and trade well. And that gives investors confidence that they can make a good return on the product. And then over time, you'll see more and more, growth companies come in thereafter. So I think we need to see that play out a little bit, which I think we're optimistic that will happen over the course of this year, alongside the narrowing of the bid-ask spread that I referenced in terms of where investors and suppliers of equity today are willing to transact.
And finally, I would say IPOs from Africa will definitely, in my view, come from fintech and tech, sort of tech-enabled business with some financial aspect to it. And I would bet that the next 3 IPOs will all be companies that have presented in this conference maybe 4 or 5 years before. That would be my bet.
Thanks again. It's been a pleasure talking, gentlemen. Hope you enjoyed the conversation. Thank you.
Thank you.